Hi, welcome to Outlier Live. So today let's talk about this news that came out yesterday. So Michael Burry, the big shot guy, he got famous because of his uh, short position during the housing crisis back in 2008, and there was a movie also which was made. So he got his fame because of that movie. And yesterday, this news came out where we saw that he's taking a short position, bearish options against S&P and Nasdaq 100. So let's look into this. So let me change the screen here. Okay. So his company's name is Sign Asset Management. So the news came out that he bought put options with a notional value of $739 million against QQQ, which is Invesco's ETF, and $886 million bet against SPY, which is essentially S&P 500. So before we look into this, let's first look into some of the rules around the disclosures, because this is very important, because we need to understand what are those rules are. So any hedge fund with over $100 million in assets, they must disclose their holdings approximately 45 days after the end of each quarter. So this is very important. 45 days. So this news came out yesterday. So what I did was I pulled Sign Asset Management's holdings. So I saw that this was reported like yesterday. So let's take back 45 days. So essentially, the guy owned these positions in Q2, which is essentially your April, May, and June, sometime between that time frame. Now, it talks about the notional value. Notional value doesn't mean that he spent that much money. Notional value is essentially the underlying value of that asset. So he owns like 20,000 put contracts he owned. I don't know whether he got out of them, because again, this is a very stale information, and people were reacting on the information which is like approximately 3, 4, 5 months old, right? And I started seeing these videos on YouTube where everybody was like, hey, Michael Burry was is betting against the market. What's going to happen? The market is going to crash down, things like that. But they have to understand that this is stale information. You're talking about 4 months old information. And again, this disclosure that you see here on my screen, it doesn't talk about the expiration date. It doesn't talk about whether he got out of the position or not, because he it is not required to disclose much about the short positions. But yes, if you are above $100 million, you need to disclose about the long position. So that is the requirement. So there is a lot of missing information here. And let's look at what happened in Q2 for S&P 500, for some of the other assets that we saw. So let's start with S&P 500. So I pulled here. So if you look here, that from sometime in April, like if I take a short position sometime during this time frame, I'll probably lose money. And same thing may have happened to him as well, because essentially he took a short position in S&P 500, and if you see, the price is kind of like it's on that upward trajectory. And again, it doesn't talk about whether he exited that position, whether he's still holding it, or whether this contract is just to cover for some other position that he took, to hedge against some other position that he took. So it doesn't talk about that. All we are seeing on news is reaction, that he's going short again, market is going to fall, but I don't think that's happening right now. So this is SPY. Let's look into QQQ. So what I did, I pulled QQQ in outlier dashboard, and just to see in April, right? So in April, the market is kind of going up. April, May, June, QQQ, the price is going up. And if he took a short position around that time, I bet he lost money. At least that's what it's telling me, unless he just liquidated right away. So here you are. So let's look into some of the other holdings for Michael Burry. So essentially, his portfolio consists of companies from finance sector, consumer discretionary, industrial, staples, energy. So he's all over the place. And if you see that some of these positions that he took, like back in Q2, Q1, Q4 2022. So it's a good way to kind of gauge when he got into those positions. So what I'm going to do is I'm not going to look into individual stock today, but what I am going to look at some of these sectors, where they are today, and how it did in Q2 as well, just to analyze how he may have done during those times. So let's look into finance sector first. So XLF, I'm looking at XLF, looking at that April time frame, right? So the prices are kind of flat here, but it started going up. So, and if he exited somewhere around here, so again, I don't know whether he is still holding these positions or whether he exited, because another news that I was reading yesterday was that Michael Burry exits stakes in 6 banks. So essentially, what I am hearing is that he's getting out of financial sector, and it's not a surprise. And I'll tell you why it's not a surprise to me, because when I look at XLF here in outlier dashboard, and let's look at in around July 27 time frame. And in fact, I have created another video. You guys can look it up few weeks ago. So I was talking about why I felt financial sector is overbought. So I saw a lot of investor fear somewhere around this time frame, and there was a very high probability for a correction, and which is happening right now. Uh, you got some of these banks got downgraded recently in last few weeks. You saw that there has been lot of fear around the financial sector overall in last few weeks. It started building up, and you see that Michael Burry is also exiting these positions. And I'm not surprised, because the price oscillator, the price trajectory oscillator is falling here. And most recently, I'm seeing that our downside indicator is active, which is still in orange color, which is still in not red color. So red color is essentially when our indicator tells whether market is kind of going to fall hard. The probability of that is high during that time when downside indicator is active and it is red. Right now it's still in orange. It may or may not happen, so we will see. Let's look into some of the other sectors he was holding. So consumer discretionary. So consumer discretionary did very well in Q2. So he probably made a lot of money over there. And again, I'm just looking at the sector level. I am not looking at individual stocks. So individual stocks may even have performed better than sector, because sector moves slow while stocks can move fast in either direction. It Q2, great time to be in consumer discretionary, but recently I'm seeing there has been a lot of pressure that is building up here, and you may see correction. And I guess that is what's happening in overall market right now. I'm looking at different sectors, like for financials, for industrial, for materials, for real estate, for utilities. I see this orange downside indicator active here, and there has been a lot of fear in the market about, the China number came out yesterday. They were very, very sluggish. The US retail number came today. They were actually great. I mean, they beat the expectation. So there has been, this fear about, Fed coming back and may increase another rate. So we don't know if that is going to happen. But I think the correction was due, and I was seeing the sign all over the place. And same thing when I look at Michael Burry. So he is kind of in that zone where he may be getting out of some of these positions, or at least reducing some of his exposure. And that's exactly what I'm seeing here in the outlier dashboard as well. So if you have any questions about any particular stock that he is holding and that we cover, I would love to talk about that. Let me know in the comments. Thanks for joining today.